Hello traders, good morning. This is Yanis. Thank you for joining me for this new trading week and for the outlook that we have prepared for you for our 7 usual pairs. Again, I need to point out very strongly that the forecasts and whatever outlook we are showing you, or the bias that we have for the pairs that we are analyzing, is directly related to the ongoing war in Ukraine. And unfortunately, that makes the predictions extremely difficult, as the pairs can have very violent moves in any direction depending on the nature of the developments on that particular front. So that makes really the task to predict anything very difficult. Fortunately enough, as you have seen all these weeks, the technical analysis which we are doing, and we are doing for us and for you as well, is providing us with some very serious tools, as you have seen. No matter the direction that the currency may or may not move, it can be a long direction, it can be a short. Usually we are just on point with the levels, the areas of support and resistance that we are using for our analysis. And I feel and I think that a tremendous help for all the traders to have those levels which are confirmed move after move after move. Okay, so pay a great deal of attention to the levels that are identified on the charts we are using, as well as our dynamic support and resistance levels, which are the 2 moving averages. By now you know that we do not trade without consulting the 20 simple moving average, but also the main moving average, which is the 200 simple moving average, a very commonly used moving average by all the very big players, institutions, funds, banks. There's no one who's not using the 200 moving average when it comes to trading. So keep your eyes and keep your ears open on the developments, and be aware of your charts. Be aware of how price is showing you that it's moving, it's about to move. Pay attention to the support and resistance levels, but also at the candlestick patterns that are developing day after day on your charts. So without any further delay, let's have a look at the euro dollar. The euro dollar is obviously remains in a very precarious position. The bears seem to be in control of that pair, and we have seen during the past weeks that the pair broke out of that range here, and that major area around 113.50. And from the moment that it decisively closed below that area, and as you can see, that area also was very difficult to be broken in both directions, actually, because of the presence of the 200 moving average, and at some point of the 20 as well. So while price remained confined within this range, and the moving averages also remained very close one to another, and everything all together tight, very tight within that 113.50 purple area that you see on the chart. Once price managed to break below everything, then the future for the next move was sealed to the downside for the euro dollar. Okay, and as you can see, the pair reacted to the levels that we have drawn for quite some time now. Came back up to retest them, retest the 20 moving average, hit that ascending trend line, reacted here, bounced back to the previous resistance level, and then again closed below the 20 moving average and so forth. So as you can see, everything is moving by the book as long as we can forecast or see the correct direction. Okay, and as you know, we always, or most of the time, we are always giving you two potential scenarios, two areas to look for, either a short or a long direction, unless the pairs are quite in a trend, in a developed trend, where in that case we are not looking for the opposite direction, at least for the moment. And that goes as well for the euro dollar. Right now we are far away from looking for anything long. The bias remains obviously extremely short. Okay, however, the pair has moved from 112.50 to almost 110, which is about 200 pips move without any kind of decent retracement. So before continuing its road to the south, I would be kind of expecting at least a medium to a deeper retracement to happen before shorting the pair again. Right now it's in the bit of nowhere. It's at a very important, it's around number 1.09, and you know that round numbers 109, 110, 111, 108 are always difficult landmarks to break. So be aware of those round numbers. Okay, so the pair for the euro dollar, the pair remains in a very bearish mood, at least so far. We would have to see some kind of improvement in the crisis with between Ukraine and Russia, and the war between Ukraine and Russia, before the currency will be able to appreciate a bit and find a way to the upside. But right now it's looking to the downside. Okay, and right now I would be waiting for some levels before committing to a long. I would like to get a retracement around the 110, 110.50, 111, and eventually even higher. I mean, I would be willing to short the pair right till the 200 on the 4-hour time frame. So for me, 112.50, 113 at that time, this is where the moving average would be, around 112.50. Okay, that's as far as I would want the pair to retrace before shorting it again. But it can be shorted on a rebound on the 20 eventually if price retraces a bit to the 110.50 area. Okay, and to me that would be the best probably area to short it. Again, I will wait for a bearish engulfing candle on my trading time frame, which is H4, before committing to that short. Depending on the entries, the stop loss would be above the previous areas of support or of resistance to the upside. Okay, and the targets would be again on the same areas to the downside, again depending on where the short will be triggered. I will act accordingly. Okay, so keep your eyes on the euro dollar. No pair, like I said, no pair is really very easy to trade, despite the fact that we do have a very clearly defined downtrend right now for the euro dollar. Moving to the pound dollar, almost the same picture. The pair managed to stay in range between 136 and 135, let's say. And then everything broke to the downside once the pair decisively closed initially below the 200 moving average, and then below that extremely important support area that was at 135, and then everything went loose to the downside. The pair hit the next important resistance area, which at which it reacted a bit, but the bulls weren't able to break the previous highs, so the downtrend simply resumed and continued up to the next area of resistance, which is 132, 131.50 or 80. We do have a small reaction here, but it looks like we won't have anything too serious. I would like to see a retracement again around the 133-ish area before shorting the pair. However, just like the euro dollar, the pound dollar remains with an extremely short bias for the moment. Moving up to the dollar Swiss. The dollar Swiss was also confined in a range the previous weeks. The bulls couldn't push through the previous highs around the 0.93 area. Then they established a kind of base around the 0.9250, which also couldn't be maintained. Then that was that retest, but nothing convincing that we could have a market close above the previous highs and above 0.93, which is an extremely important resistance now. And everything points out to a short bias for upcoming trading week as well. So for me, it's a clean and clear short. Obviously, I will have my eyes on that area waiting for it to be broken, and eventually a candle closing below that ascending trend line. But the pair remains short with your short that your stop loss should be around the 0.93 area, which is somewhere here. Okay, eventually the 0.9250 can also serve as a decent stop loss if you want to reduce your risks in that case. And then your target for me would be 0.9120. You know that I'm always keeping a small margin. Sometimes price doesn't exactly precisely reach those areas or those levels. We may miss them by 10 or 20 pips. And this is something that you need to consider and always keep in mind, okay? So never put your stop losses or your targets precisely to the pip or a couple of pips dead on the levels that are appearing on the charts. Always keep 10, 15, 20 pips as an additional margin for that. So for me, the pair right now is trading below the 200 moving average. It's also trading below the 20. It's an immediate short. Unless we do have a reaction, obviously we are kind of looking at 1, 2, 3, 4, 5, 6 touches or 6 retests of the 0.9150 or close to that area. And obviously that can mean that it's a very difficult area to break. However, I'm not seeing as a reaction from the bulls as important as to take out what happened last week and a couple of weeks ago. So for me, the bias remains extremely short. My first target would be the 0.91 area, 91.20, 91, and then obviously that would open the door for 0.9040 or close to that level. Okay, so we remain bearish on the dollar Swiss. The next pair that we want to have a look at is the dollar yen. I'm still, remember those of you who follow the presentations week after week, it's been a few weeks that I'm still bullish on that pair, on the dollar yen, despite the fact that it's not making anything. Actually, it's in a range. It's trading in a range. However, because it kept doing higher highs and higher lows compared to the previous movements, I kept my bullish momentum and my bullish bias. And if you have a look at the daily chart, you will see that we are in an ascending channel right now, despite the fact that we have that double top created here, and then the pair started moving lower. However, because we still make higher lows, that can be an accumulation phase for the bulls gathering up dynamics to break further high. And as long as we maintain at least the higher lows on the daily time frame, this is the reason why, for me personally, the bias remains long, despite the fact that I didn't like that close below that the 20 on the daily moving average. However, we are still above those previous highs, okay? And unless everything is broken to the downside, meaning breaking that level here, that level here, and at that time the 200 moving average, there's no short scenario for me for the dollar yen, at least mid and longer term, okay? On the shorter term, and as far as the market opening is concerned, definitely a very bearish close of the week, taking out both the 20 and the 200 moving average on the 4-hour time frame is an important statement. Again, as long as I don't have anything closing below those lows, I'm not considering shorts. So I'm kind of expecting that move, like I said, based on the weekly and the daily time frames analysis. I'm expecting this to be just a gathering of dynamics from the bulls side. Time will tell if I'm right or if I'm wrong, okay? But my personal bias still remains bullish for that pair. Now, I'm expecting a retracement to happen. That's a very bearish end of the week, so I'm kind of expecting the pair at least to get back down to 113.80, 114.50, the previous lows. Somewhere in these numbers, we will see the price patterns, okay? So I will be watching those levels, and I will be waiting for the usual bullish candlestick pattern, a bullish engulfing, and a big one actually taking out a few bearish candles that will have occurred precedently, and before committing to my long position. Again, the stop loss, you need to be very cautious about that stop loss. That will depend on the rebound, where the rebound happens. If it happens around the 114.50 area, around the previous lows, then you could use 113.80, for example, or 114 as your stop loss. Okay, I would prefer using 112.15, which is somewhere here below that purple area, because like I said, for me, that area is a key area for a change of direction. So anything could happen up until that area down here, okay? Obviously, the deeper the retracement, okay, the shorter or the tighter the stop loss that you can have, and obviously the better the targets and the risk to reward ratio that you will have. So keep your eyes on the levels I'm noting here for the dollar yen, and we'll see how things play out. The next pair is the Aussie dollar. The Aussie has appreciated quite a lot. It seems to be one of the pairs that are moving very fast, and essentially even more than the Aussie dollar, the miners like the EURUSD and other minor pairs using the Aussie. So the Aussie remains obviously very bullish. However, because of that move from 0.7150 now to 0.7370, which is a very big move, we didn't have any kind of decent retracement either. So anything can happen. Actually, the pair does have the momentum. If we look at the daily, the pair does have the momentum closing above the 200 moving average 2 weeks ago, and then just flying high. As you can see, it did retest the 200 moving average, especially on the daily, the weekly, but also on the 4-hour. Is a key element for your trading. Okay, you cannot ignore those moving averages, and there will always be a reaction at that level. So keep in mind that these levels are excellent levels for you to either cover your positions or secure your positions, or even close your positions for a decent gain, as anything can happen. However, because of the momentum, and because we know that it's one of the currency pairs that's not that's appreciating from the crisis in Ukraine, from the war in Ukraine, it seems that last week was also extremely bearish. The bulls managed to recover that small retracement down, and then push the pair to a very, very high level, 0.7380. Almost in a week, the entire 0.73 level has been tested and then almost taken out. So very important move, very important statement. However, also very straightforward move up. And you know that I don't like necessarily those very big moves. So I'm obviously very bullish about it. However, that could be an exhaustion candle. Okay, that was the candles that created the very initial push. Then we had some force gathering from the bulls before the next push up, and then the next one again, and then a very important candle, but it's spot on that resistance area, the 0.7350, and it's also at the top of that first, or that leg, let's say, to the upside. So I would be expecting a retracement, and for me a decent retracement should at least get back down to the 20 moving average on the 4-hour, which coincides with that descending trend line and those previous highs. So somewhere in that area, the 0.73 area, this would be the area I would love seeing an engulfing bullish pattern to confirm and validate my long bias and my long position. Okay, but again, the momentum is such that at the opening of the market, we can also have a significant push higher. I'm not really expecting the pair to go straight up to the 0.75 area, which is the next target to the upside, obviously. But it should create somewhere, it should find a place to retrace for the bulls to start and liquidate some positions. And then at the same time, there will be more pending long orders waiting, which will fuel the next leg to the upside. Okay, so keep your eyes on the Aussie dollar. Extremely bullish, yes. It is right now at a level where it would be good and it would make sense to have some reaction to the downside, for which I will be waiting for. Okay. The next one that we want to see is the dollar CAD. Okay, the dollar CAD again remains in that slightly ascending channel that was created weeks and months ago. Yeah, but it's a pair that moves quite difficultly. Okay, with very big obstacles, as you can see. Once it went above the 200 moving average here, it tried to break it again, then moved back up, and then nothing. The pair wasn't really able to create new highs. Okay, but at the same time, the low seems to handle, and this is why when you're looking for a long bias, more important than having higher highs and higher lows, part of the equation can only be if you have higher lows. Okay, so higher lows does validate some kind of upside bias, let's say. Okay, and here we did have the break, we did have that reaction that was expected at the 128.50 area, and remember all those weeks I was highlighting the 126.40 area as a major area of support. The bears tried to break it. Actually, they did break it, but as you can see, there was a huge reaction from the bulls, who again regained control, managed to close above the previous highs here. And now we are still having yet another reaction from the bear. So basically the pair isn't going anywhere. However, my bias remains long, at least, like I said many times, until I'm seeing a decisive close below the 126.40 area and a follow through that close. Otherwise, the pairs remain in a very bullish momentum, even if it's kind of going nowhere right now. For me, the dollar still has some power in it, and I'm waiting to see it materialize here on the dollar CAD as well. Okay. However, like I said, for me, 126.40 is a very important and a key area that would invalidate any long position if price gets back down here. I would be expecting a reaction, either an immediate reaction or an reaction around the 127 mark, somewhere here, where I'm hoping that both the 20 and the 200 moving average will serve as a great dynamic support and allow the bulls to gain that control and push back up again towards the 128 area. So that's the outlook. That's how I'm planning to see the CAD moving. We'll see, like everything, we'll have to wait and see how things will materialize. Last and definitively not least, gold. We have outlined many times that gold is always an instrument like a safe haven. So whenever the Forex market, especially the Forex market, is troubled, and especially whenever there are fundamentals that are scary, like the war that we do have for the past 10, 11 days right now, it was expected that gold would appreciate and would look to the upside, no matter what any other currency would be doing. And as we can see, we do have an excellent respect of the 20 on the 4-hour trading time frame since last week. The pair retraced a bit to find the support needed to push higher than the important 90.50, 1960 level. Okay, 90.50, 90.60, like we had outlined, and above that previous high. My only concern, I would love to see the close below that week here, that week here. However, the pair seems to have enough momentum to slightly retrace or even move immediately as the market opens. That remains to be seen. Definitely, I would prefer some kind of retest of the 20 moving average eventually, or of that area, see the pair gathering some momentum by smaller candles going slightly sideways, but still maintaining the higher lows that I'm looking at, okay, before pushing to my target, which would be the 2000, 2010, 2015, very important also level to mark and to keep in mind. Okay, in that case, your stop also would be or should be quite substantial. Obviously, you can use the 20 as a stop. However, you could have some spikes taking out any long position. So I would prefer having my stops below the previous lows and even better below 1860, 1850. But I know that's a huge stop to maintain. At least that would be a mental stop and not a physical one. However, if you want to trade gold again, my personal bias is long. You can use the 20 or the previous lows to maintain a very a smaller drawdown, potential drawdown, keeping in mind that you can be taken out. Okay, I'm not sure if the pair will have the momentum needed on the market opening to push higher. We are expecting, there was a memorandum on Kiev today, Sunday, allowing again people to try and get out of that city before the Russian troops try again to invade it. But if that scenario materializes, and it's very I wouldn't say sure, but very possible that this is the way things will go. Putin has not a 20 miles convoy just at the doors of Kiev, the capital of Ukraine, for nothing. And I think that he needs that entrance as more than as a sign, and this is why he allows for citizens to try and get out. There's a lot of things going on, so depending on how those fundamentals will develop in the next hours and the next days or couple of days, that will have an immediate impact on all the currencies and on all the instruments that are trading, the financial instruments traded all over the globe and all over the planet. So we can't really foresee, but we do know that we can expect further escalation in that war. And as long as that escalation and that tension is maintained and there are no solutions and common grounds to be found, unfortunately, gold will continue to appreciate and climb higher and higher. So that's the way we see things in this very tormented and turmoiled week that is about to break. All our thoughts are for those people in Ukraine, but also with all the soldiers. I mean, it's deceptive to say the least, and it's very frightening to live in Europe and see war in the 21st century and see still people dying on the streets, buildings being bombed. I mean, we should be way past all these things. Unfortunately, history tends to repeat itself, and as long as it will repeat itself, mankind is far from being safe. It seems, unfortunately, that we cannot learn. We are not able to learn from our previous mistakes, unfortunately. And if you look at that war now, if you look at the way we are treating the only planet that we can have, we don't have a second opportunity. We don't have a second home. All that we have is that planet. And I think that from quite some time now, the planet is trying to explain and to show us that something is dead wrong. And we are doing very, very bad things to not only to the planet, because the planet will find its own ways to recover no matter what we do. Okay, but we are clearly heading towards shooting ourselves in our foot, and that's not the smartest or the best things that we can do. I don't want to be too melodramatic. I'm not that kind of person, but I just wanted to express my feelings and my sympathy for all those peoples and all that suffering that yet again comes out, and it's just not very far away from our yards and our homes, no matter where we live in the world. Unfortunately, violence and death is way closer to what we can think that it is. Okay, so my thoughts are with all those people suffering and and in the need of relocating and leaving husbands and childs and boys back to fight an unholy and unjust war, like all wars. And all my prayers and my thoughts are for all these people. So manage to stay safe no matter where you are, and it would be nice if we as humans start to think and really think about the collective benefits and the collective well-being, and not just our own and our own family. Thank you, guys. Wishing you all the best for the new trading week. Take care. I hope to see you all next week. Thank you. Bye-bye.